Hey, what's going on, everyone? Daniel Betancourt here with Team Betancourt of eXp Realty. And today I am joined by special guest Brad Siebert. And Brad Siebert is a mortgage loan originator, someone that I've worked with a lot over the years. He's helped a lot of our customers. And he's been an excellent team, an excellent partner to our team when working with buyers and even sellers. So welcome, Brad.
That's good to be here. Thank you for the invitation. I appreciate it.
Yes, no problem. So I just wanted to, take a few minutes and talk to you a little bit about what's going on this market right now. It's a fast-moving market for sellers. I know buyers are experiencing different issues than they might have experienced a couple years ago. What have you been seeing lately that's a little bit different in this current market that we're in, seller's market, hot market? What struggles and solutions have you been seeing out there for buyers that are out there competing with all the other buyers for these homes lately?
So the number of buyers competing against the same house is much higher than any other time I've seen in the last 19 years. So it's almost like a competition or a race, or, the first one there is trying to get the early bird gets the worm.
Right.
So usually if you compete and there's maybe one or two other offers, that would be standard. But now I've seen people that in the first day, within the first hour, get 10 different offers with buyers that haven't even been to the place. So that's just not common. So the best way to compete against that, of course, you could always offer more money, but that's not what the buyers want to do. They want to get the house at the most competitive price, is to have the pre-approval letter stand out versus the other ones that are coming in there. So, you can, like with us, if it's a very competitive situation, we'll be glad to get the income looked at before we get under contract by the underwriter. So we could put in the contract, hey, the income's already been looked at, so is the credit. It's been underwriting reviewed and approved. So that shouldn't be an issue once we get the loan into underwriting. And what this does, it allows you as the realtor to offer a shorter time period to get a loan commitment. So maybe instead of 21 days, get it in 14 days. And if we need to close in under 30, sometimes people want their money quicker. They'd rather have a little bit less money quicker than more money in 45 days. Well, if we need to close before, in a shorter period of time than the standard 30-day close, just a little heads up, we can arrange that before you make the offer so we know what's going to happen, and doing it that way. So we try to separate our pre-approval letters from the competition. We want the sellers to know that we've done more than just talk to somebody on the phone and pull credit.
Right.
We've reviewed their tax returns if they're needed, or pay stubs or W-2s and bank statements. So if there is a question from underwriting that's going to happen, we're going to address it now, not after they get the contract.
Right. Yeah, that's super important. Something else that you've done for a lot of our customers in the past, even before the market was crazy like this, is communicate with the listing agent. Yeah. When we make an offer on a home, the listing agent has a bunch of offers, sitting in their email, and they're helping the sellers decide which ones to choose. When I'm listing a home, it does make a difference when the buyer's lender gives me a call and lets me know how strong the buyer is. And that's something that you've always been willing to do with your customers. So you've probably been doing more of that lately than usual.
Yeah, we understand, the buyer's our client, but we want the seller to know that we respect, their decision. If they decide to go with us, that they're not going to sell to anyone else. So we want this to close. And I have a saying, I don't hope for something to happen, I expect it to happen. So when I issue a pre-approval, I expect it to close, and I want the seller to know that before they make a decision, that if they accept our offer that, we have the pre-approval on, that they can expect a smooth closing on time. I go through, hey, 30 days or whatever the time period is agreed upon, and that, not only will we close on time, but they'll get good communication throughout the process, so they know what's going on to keep their sellers, decrease the stress. It's stressful on both sides. So that's our main goal. Let's make this process as stress-free as possible and close as smoothly and effortlessly as possible.
And I think a lot of customers out there, they have misunderstandings about appraisal issues.
Mm-hmm.
So some people believe the lenders are trying to appraise low, so they can be better leveraged or feel less risk. And other ones feel like the lenders have something to do with the appraisal if it appraises high, because they just want the deal to close so they can make more money. What involvement does a loan originator like yourself or a lender have with the appraisal process?
Yeah, and that's really a difference. People say, well, why go to you? Okay, because a lot of loan officers out there, they get the appraisal, it comes in, it is what it is. High or low, there's nothing they say they can do. But in actuality, no matter what type of loan you're doing, conventional, VA, FHA, there is a dispute process to go through. And it's just as wrong for an appraisal to undervalue a house than it is overvalue a house. And when an appraisal doesn't come in, we'll contact the buyer's agent and the listing agent, go through the comps that are being used. And, they're human. They're going to make mistakes. They may not notice that a house just sold a week ago that maybe hasn't been updated, but, the information that you have would have given them the ability to make a better decision. Right. And before it goes into underwriting with a lower value, we're going to have both buyers and listing agents on the phone. And if there's something that they did wrong, sometimes their math is wrong.
Right.
You know what? The square footage, they transposed two numbers and that threw everything off. So we're going to make sure that if it does come in, it comes in at a good and accurate value. We can't say we're not going to have loans that come in, under sales price. With this market, it's happening more and more. Mm-hmm. But I can tell you that if it does come in low and it's not a good appraisal, you're not going to have a better fighter on your side than I am, because 20 years in the business, wrong is wrong. It's right. Overvaluing it's wrong, but undervaluing when it is just the same amount of wrong. So we're not going to let that stand. Our motto is do the right thing. So whatever it takes to get that done, that's what we're going to do.
And now that all the sellers or homeowners in general are enjoying the fact that their homes are worth more than they were a year ago, 6 months ago, 2 years ago, are you getting more refinance requests as well?
I haven't seen a small decline in refinances because, even though interest rates are up a little bit, a lot of people are wanting to add on because the housing prices is going up. So if they sell their house, they got to go compete with the craziness in the market. So they're saying, well, what if we added on or upgraded? Right. And it's still, interest rates are at still a very, very all-time low or close to it. Mm-hmm. And if you include inflation, it's almost free money, as far as the interest rate that they're offering you. We're talking 30 years in the threes is an incredible, and sometimes in the twos, depending on the loan type you go with. Yeah, we've still seen a pretty active market regarding refinancing and purchases. Our purchase numbers over last year is probably 50% more purchases than what we've seen in 2020. It's a hot market and people want to take advantage of it. Yeah, it's great.
It's incredible because inventory is low, but your volume is increasing. So that's awesome. We were seeing the same thing on our team. We've closed a higher volume, even though there's a lot less inventory to work with.
Yeah, and I hear, if you have an FHA buyer, you can't get them approved. No one's going to accept it. Again, it's all depending on who you work with. An FHA buyer is just as approvable as a conventional loan, and that's where we educate the listing agent. Hey, I've seen everything. We know what their income is. Everything's going to be good to go. It's the buyer gets a better deal from FHA than they do conventional. It's not that they can't qualify for a conventional loan. They're going to get a lower payment, or it may be because they have student loan debt or something like that, which means an FHA is more competitive than a conventional. And we let the seller's agent know that no, it's not. FHA means they're less qualified buyers. They're strong buyers. It's just FHA is a better deal for them. And that's our goal. We're going to get you the best loan possible.
And you offer VA, FHA, conventional.
We offer the gamut as far as those concerned. And then, for self-employed borrowers, you know, a lot of times people's tax returns that are self-employed don't mirror their lifestyle.
Right.
And, oh, I don't show enough income on my tax returns. Well, we have alternative loan programs that we don't consider tax returns in the approval rating.
Right.
If you're an investor right now is the best time to get in the market. We can get you an investor loan fixed for 30 years. We don't take into consideration your employment. It's strictly based on credit and the amount of monthly income that the property is going to derive. And it is a great time to be a real estate investor, especially if you're looking to hold and rent and, you know, take advantage of the appreciation in the property over the years.
Yeah, that's something that I've always appreciated about working with you is you have a lot of solutions. You know, when I'm talking to a customer and I recommend you, I say Brad's a mortgage wizard. So, you know, they're kind of throwing out all these challenges that they feel are challenges. And I don't try to solve those challenges for them. I say, you know, if there's someone you want to speak to, it's Brad, because he's a wizard when it comes to problem solving and mortgages. So speak with him. If he says it can't be done, then you know, I'll take your word for it. But don't assume that it can't be done just based on the limited, you know, information that you may have gotten from some other.
Yeah, that's the one thing I would tell everyone. Don't accept one no. Okay, I will tell you that not everyone wants to put in the work and effort to get, you know, a loan done, especially now when everyone's trying to get approved. They'll just go on to the next one because it's easier.
Right.
I would say about 25% of the loans we do on a monthly basis, someone has said no to and declined.
Right.
And not because, oh, we have that loan type that they don't. It's they didn't understand how to structure the loan properly to get it approved conventional. And most of them are conventional that we approve that others aren't approving. So it's not like we're going into, you know, a very niche loan. It's just the person didn't understand how to properly structure the loan, so it would qualify. And, you know, like you said before, if it doesn't make sense that you're not getting a loan, you know, I'd want at least a second opinion, if not for me or for someone else, and ask how many years in business have you been in? You know, you learn a lot over 20 years and almost 20 years in the business. So
experience matters. You've you know, the longer we're in this real estate business, new challenges come up, and when they come up in the future, we've dealt with them already. And the longer you've been in business, you've just dealt with more different kinds of challenges, and you have the experience of overcoming those. So that's awesome. So if someone was interested in speaking with you about their mortgage needs, what's the best way for them to contact you?
They can go to my website at wearenotthebanks.com, all spelled out, or call me at 407-353-3750.
Okay, that's awesome. Well, I fully recommend and endorse Brad Siebert for anyone out there who needs some mortgage information or refinance or purchase. You can reach out to him. Wearenotthebanks.com. That's a cool website. And just quickly, why did you choose that domain as your website?
You know, almost 20 years ago when I got in the business, people would call me up and say, hey, I don't have perfect credit. I got turned down. Can you help me? And I would say, yeah, don't worry. We're not a bank. Hey, I want you to come out on the weekend. Is that okay? Yeah, don't worry. We're not a bank. We don't work those hours. And I'll be real up front. Without banks, no one wins. Okay. So they're not our enemy. It's not that I don't like them. They're one of my greatest referral sources. They do loans that we can't do and vice versa. So we're a good team together. It's just, it was a common phrase when people ask, would I do something? Because their bank had told them no. And that's what I would say is, oh, don't worry, I'm not a bank. I'll do it. You know, so, you know, it's easy to remember and very easy to spell. So, it's, you know, it's a win-win for everybody.
Well, that's awesome. I appreciate you coming on today, and I'll have you on again in the future. And thank you for helping all the customers that we shoot over to you. And hope you have an awesome rest of the week, and we'll be in touch.
Yep. Thank you, Daniel. Have a great one.
All right. Take care, everybody. Thanks for watching. If you have any real estate questions, I'd love to speak with you. You can always reach me at 407-375-9142 or teambetancourt.com. I'm happy to speak with you about any of your real estate needs and also provide recommendations for all different types of service providers, real estate related. So I hope you all have a great rest of the day and rest of the week. Take care.